The Fed cutting rates as expected yesterday, but markets read a hawkish cut as somewhat dovish. Steve Liesman joins us right now with more on that. And Steve, this was interesting to watch the market's reaction after hearing this and then hearing Jay Powell speak.
That was the curious part of it. All went as expected, except perhaps the curious market rally that came after. I'll talk about that in a second. The Fed followed through on an expected hawkish rate cut, reducing rates by a quarter point to the new range of 3.5 to 3.75, and signaling, hey, it might be done cutting for now. The statement used language it had used in the past to signal a pause ahead, and Fed Chair Jay Powell several times said policy is well positioned, which is sort of Fed code for we're done for now.
I would note that having reduced our policy rate by 75 basis points since September and 175 basis points since last September, the Fed funds rate is now within a broad range of estimates of its neutral value, and we are well positioned to wait to see how the economy evolves.
There's that well-positioned note. Well, the Fed futures embraced that outlook for pricing in just a 19% probability of a cut in January. And a 43% probability in March, and then a greater chance as the year goes on. The vote count, 9 for cutting, 2 against cutting, and 1 for cutting 50 basis points. Maybe not as bad as expected by the market. The dot plot, somewhat more hawkish, with 6 officials wanting no change in the funds rate at this meeting, 7 officials wanting no change for next year. But the median claiming that 1 cut for 2026 and 1 for 2027. But the forecast did show an uptick in growth next year, with declining inflation, read greater productivity. More dovish, the balance sheet outlook, which Barclays called, quote, a very big Christmas gift. Well, it begins on December 12th. The Fed will begin buying bills out there sooner than the market expected, focusing on bills but could go up to a 3-year maturity, and a total of $40 billion for at least several months, which was more than expected. Now, Powell insisting this is not new quantitative easing. He said these purchases designed for the Fed to maintain an ample supply of reserves in the banking system and provide liquidity during times of strong demand. Call it whatever you want. The stock market seemed to like it. And tomorrow I'll be in Chicago interviewing President and now dissenter Austin Goolsbee right here on Squawk Box. Guys.